What's up, everybody? Eric Mashinsky, Gold Investment Letter. Thought it would be really interesting to bring on some folks that are seasoned in the nickel market, because what is it today? We've got March 10th. We've had a nickel price on the LME that has basically been frozen for a couple of days, which is odd, you could say. And there's reasons for that. There's been some, there's speculation, there's rumors, but certainly there is a short that has gotten caught in this market, and that is going to be resolving itself. But I thought it would be really helpful for us just to address nickel. You guys all know how bullish I've been on the nickel market and price, and I think we're just getting started in a very fruitful new bullish environment in this space. So today, want to welcome two folks with a little bit different, backgrounds and roles, but CEO of Giga Metals, Mark Jarvis, and the president and also director of Giga Metals, Martin Vidra. Hey guys, how are you?
Good, thanks.
Excellent.
Awesome. So why don't I do this? What are you seeing out there, Mark?
You're asking me? Well, yeah, the short is very interesting. Everybody's reporting that it's the chair of Tsingshan, which is the largest nickel producer in the world. But they produce class 2 nickel. They produce nickel pig iron. And what they're short is class 1 nickel, which is LME nickel. And so in effect, they're naked short. But I don't know nearly as much about the nickel market as Martin Vidra, our president. Martin is a former chair of the Nickel Institute. He's a founding member of the London Metals Exchange Cobalt Committee, and he knows the LME inside and out. So I think his opinion is one I would rely on far more than my opinion.
Cool. I will get to, and I was going to get to that. Figured I'd give you one little pop up there to start. But you've also, Martin, tell us a little bit about your background. But you've been with Sherritt for a few decades, and what else is? You've also had a pretty global footprint, it looks like, with various roles that you've had. So tell our people a little bit about how involved you've actually been in this market.
Well, I've been in the nickel market since coming out of school in '87, so I'm at danger of dating myself, Eric. And yeah, I spent 31 years at Sherritt. And one of the beauties of Sherritt is it's not only a nickel producer, they are the exporter and implementer of nickel technology, nickel and cobalt extraction, refining, and recovery. So in my career at Sherritt, I was exposed to selling technology to various deposits around the world. Sherritt helped develop the Murrin HPAL nickel operation in Australia. That was one of the first HPALs built in this generation. Sherritt built they built BHP Kwinana's nickel refinery in Western Australia. They built the Harjavalta nickel recovery circuit in Finland, which is now Nornickel, and they also licensed that technology to South Africa, various places in the world. So I had the joy and opportunity of visiting a lot of these places and also seeing a lot of new projects come across our desk. Coupled with that, as Mark alluded to, I've got a very heavy influence on the marketing. So I've been marketing Sherritt's nickel and cobalt starting in the early 90s, and then back early in 2007, I was responsible for their global marketing operations. So that gave me a lot of exposure to customers, end uses, pricing mechanisms, things like that. So I consider myself to be fortunate to have been exposed to that, which gives me a pretty good understanding of what's happening in the nickel market day to day.
Cool. And what is going on? I mean, this is a little odd these days, isn't it? I mean, we seem to have had this suppressed, sort of dormant, dead, general commodities market, but certainly nickel had gotten my attention months ago for how seemingly underpriced it had been. And then all of a sudden, voila, with Russia, Ukraine, boom, boom, big bang, and then everybody's upside down. What's your take on this action?
Well, what we've seen is a massive underinvestment in Western nickel supply in the last 2 decades, since the financial crisis of 2008, when commodity prices crashed. Western producers and projects have basically not been able to finance new development, and new growth has been financed out of China and Chinese companies, which have really focused on developing nickel deposits in Indonesia. And that's where this company, Tsingshan, they went from nothing. They weren't really in existence in 2005 to becoming the world's largest nickel producer. Here we are in 2022. And they got into it because they wanted to feed nickel into their stainless mills. So over the last 15 years, you've had no growth in the nickel supply because the world felt like there's always going to be enough nickel to meet demand. Stainless steel has always been the biggest driver for nickel up until recently. It still consumes about 2/3 of all nickel produced. However, with the advent of electrification of the EV fleets, Tesla has been a huge catalyst for that. And of course, the focus on eliminating greenhouse gas. There is now a focus on lithium-ion batteries, which, we in the nickel industry have felt that was something that was coming sooner or later. It's kind of like being a broken clock. We know we're going to be right twice a day. And we knew at some point in time, the nickel market would take off because there hasn't been sufficient development. With COVID, that was curtailed, but 2021 was a year where you saw EV vehicle manufacturing go to 6 million vehicles, where it was estimated it would be 3 million a couple of years ago. So it was double. And you saw stainless steel come out of the doldrums, and stainless steel grew by about 9%. So what this created was a demand on nickel, which did not exist. That demand was mopped up, for lack of a better term, by available nickel in LME inventories. At the beginning of 2021, the LME stockpile of available nickel warrants, off warrants, was about 250,000 tons of nickel. That represented just under 10% of annual production at the time. Over the course of 2021, that inventory shrank to the point where today we're at about 77,000, 80,000 tons of nickel on LME, and much of that material is held by two parties closely held. So it's not really available. And if you ask a consumer, if you want to go and get nickel from the LME, they'll say it's almost impossible. So there is a lack of available nickel units, new nickel units, to make up for extra demand, which has started to create this stretch on the price. That coupled now, so we've had an appreciating nickel price over the last 12 months. You couple that now with this conflict in the Ukraine, which of course was unexpected, which theoretically impacts the world's #2 nickel producer, Nornickel. Are they going to be sanctioned or are they not? Nobody's talking about it, but if they are sanctioned now, you've lost access to the #2 nickel producer in the world. Now, they don't primarily feed the battery industry, but they feed enough nickel units where the battery industry can get their nickel units from somewhere else. If you now remove Nornickel from availability in the Western supply, that's going to create more demand now on nickel units that don't exist. And what happened is we saw the price start to appreciate. As Mark pointed out, you now introduce a third factor where you had a significantly large short seller identified as Tsingshan. And I've read reports in the media where his short position was close to 100,000 tons. There's not 100,000 tons of nickel out there. And the LME contract is physically settled. So he had to come up with 100,000 tons of physical material. And now what you create is a bidding war for any available units. And that's what we saw happen Monday, where the price of nickel essentially went from $24,000 a ton to, I think it closed at $42,000 a ton. Overnight in Shanghai, it reached $101,000 a ton before they shut down with their circuit breaker. Tuesday morning, the LME opened up, and then it decided to shutter down at $82,000 a ton because the margin calls were immense. So now I think the LME is regrouped and trying to figure out what are they going to do, while the rest of the world that relies on the LME price to settle contracts, is wondering, what are you going to do? You broke our pricing mechanism. Consumers and producers who relied on this are now out in the cold with no backup pricing mechanism. And the people who created this mess are just sitting there trying to figure out how are they going to clean up this mess. And it's not like it happened overnight. The LME knew the positions that were being taken on this exchange. They knew who held the inventory and how closely held it was. And they saw the pricing appreciation. They could have, one could argue, they could have done something before this got to the point that it did. They could have introduced circuit breakers, they could have introduced other rules or regulations, and they didn't. So now we're in this situation where there's a mess. When and if the LME starts trading the nickel contract again, and I've heard through market participants that it may be Friday, it may be early next week, expect a rough ride. Expect a rough ride for the first little while.
Yeah, I would also add that, I mean, the LME broke all the contracts that were exchanged on Tuesday. And like, you can't do that. I mean, the people that were on the winning end of those trades, I can't imagine that the lawyers aren't gathering as we speak. I mean, the LME is going to get its ass sued over this, I believe. We'll see.
Yeah, I agree. And I think, what's going to be interesting is when they finally do open it up, it's going to be all over the board for 24, 48 hours, 72 hours. And then we get to see real price discovery, right?
Yeah.
And that should be where it's interesting. Martin, were you going to say something?
Yeah, I was going to say it is going to be interesting because people need to realize that incentive pricing for new nickel production outside of Chinese production to come on is about, call it $25,000 a ton, which is where the nickel price was getting to before this craziness started. I believe once nickel starts trading again, people are going to realize how vulnerable the nickel supply chain is, especially now with the conflict in the Ukraine. And I think you're going to get, as you say, real price discovery. And I think people are going to start valuing nickel for what it's really worth, which is probably the $25,000 a ton. Let's call it $12 to $14 a pound. And people in the nickel industry feel like that's the price you need for nickel to develop new projects, such as Giga Metals Turnagain project, and also be able to maintain existing operations, which in the West are getting old. Outside of Voisey's Bay, which was built in the 90s, most of the nickel operations in North America are 50, 60, 70 years old. They take money to keep up, especially with all these new ESG requirements. You look at some of these, and I'm sorry, Eric, I'm going on a little bit, but you look at some of these operations, the ESG requirements when they were built in 1930, 40, 50 are different than now. So they've got to invest big money, whether it's in sulfur dioxide capture, whether it's in carbon dioxide emissions reduction, or no more liquid effluent into the waterways. So you need a strong nickel price to promote this. And the consumers, the people who are buying your Teslas and your iPhones and your all of these rechargeable batteries, they're going to have to buck it up and realize that these rechargeable batteries cost a little bit of money if you want to feel good about the metals you extract from it.
Yeah, I would say 12 to 14 would be my real low end of a floor probably that gets carved out. 14 to 17, possibly some spikes. Who knows? This thing could open at $25 a pound, and then really be all over the place. It could be fun, from a little bit of a trading perspective, but I wanted to keep this one pretty brief, but maybe, because everybody, we do need to do a separate, more elaborate update call on Giga, because we obviously have a bunch of folks that own the stock, as I do. And I know, Mark, you're the largest shareholder, about 6 million shares. And Martin, I think you've got a position as well. You're obviously there with the company over anywhere, you could have gone anywhere. So why don't we just do a quickie, get both of you maybe a little plug on where do you think the state of affairs is for Giga Metals? Because clearly I've been very vocal about the fact that the stock is undervalued compared to what you have in the sector. And usually when these little ignitions happen in a commodity price like this, you're going to start to see things shift around. And we really haven't even seen it yet much with Giga. I expect a much bigger price discovery reset on Giga pretty quick, most likely. What are you guys thinking in terms of just your positioning, and maybe just give it a 60, 90 second little plug from each of you, an update on your thoughts.
Well, if I can start, in North America, if you want a large project that's capable of delivering material to the cathode, to the battery supply chain, we have that project. That is us. All of the other projects in North America of a similar size, say capable of producing more than 30,000 tons a year of nickel for an extensive mine life, they're all modeled as ferronickel projects. They're all targeted at the stainless steel market. And so we're the only large project that's done engineering focused on the battery supply chain. And the strength of our project is its simplicity. 99% of the nickel and cobalt are contained in one mineral, pentlandite. And so crush it, grind it, float it. And the flotation circuit has to do one thing and one thing only, and that's float pentlandite and suppress everything else. We don't need magnetic separation because we don't have a wariorite in our deposit. We don't have many different species of sulfide nickel. We've got one. And so it's just simplicity itself. And simplicity equals low risk. So all we're doing this year, on the ground is getting enough information, just the tail end of the information we need from the property to support a pre-feasibility study. We're just describing it in more detail. But I guess that's the main message. It's very large. It's a low risk project technically. And Martin, because of his background, has been leading the charge. There's the usual question in the mining business. It happens again and again. You get a tiny company with a huge deposit. How do you square that circle? How do you get your project built when you're tiny and it's $1 billion plus project? Well, the answer is you do need strategic investment, in the project. Martin, because of his knowledge and connections, that's his brief. He is leading that charge, and he is the one that's talking to the strategics. We can't get into details, obviously, but I'm aware that the tone has picked up, partly because of this craziness in the nickel market that we're currently seeing is a bit of a wake-up call, I think, for some of the end users. But I'll let Martin take it from there.
Thank you.
I'll keep this brief for you, Eric, because Mark's touched upon it. Let's put it this way: if I had $1 billion to invest right now, I'd build Giga because I know it would get the return. And I've seen almost every nickel project that's being touted out there today, and I've been at, I'm going to say 70% of the nickel operations in the world, including in China and Jinchuan. If I had a chance to sit in front of, say, Jeff Bezos or Bill Gates or Warren Buffett, and they were looking to invest in a nickel project in North America, you could put me in front of any of the other CEOs in our peer group, and I can tell you I'd probably have them investing in ours once they heard our story. And I mean, that's about as plain as I can get. Is we are what we say we are, and we're not going to tout that we're $1 billion build and end up at $5 billion like some of these other projects in the history, which I've actually been partially involved in, that these budgets get blown up. That's one of the reasons I think we're undervalued, is we've given a real number and we're confident on that number. And if I had $1 billion, I would build Turnagain, and the shareholders would just reap the benefit for 50 years.
Awesome. I think that does sum it up well. We'll keep it brief on the marketplace in general. And then when we have some people get the cobwebs out of their head and the dust out of their eyes, and Giga starts to actually trade like a normal security to where it's valued, I'll bring you guys back on. We'll do more of a walkthrough of the PowerPoint and really get people up to speed. I think it's important just based on the size of the project, the marketplace, and if we're right, then I'm right on the cyclical nature of where we are in the metals markets. I mean, I don't know. This market's been weak and just dormant for a long time, and we are, the circumstances, especially with how many people are either negative, doubtful, or just dead. It's really primed for a nice multi-year run, at least some strength in a market like nickel. So should be some profitable times, guys. And I appreciate your time on briefing our folks on this crazy market. So appreciate it much.
Thank you, Eric. Eric. Let me just leave you with one more factoid that I forgot about. Every dollar increase in the price of nickel adds a depreciated net present value to our project at a discount rate of 8%, so PV8. Every dollar adds $550 million US to the PV8 value of our project. So if you want leverage, you need look no further.
There you go. All right, guys. Thanks so much.
Thank you,
Have a
Eric.
good night in Vancouver. We'll talk soon.
Thanks,
Okay.
Eric.
Cheers.